Hi everyone, Craig Power with Power Realty Advisors based in Hingham, Mass. And today's question is, will the housing market crash? Will the housing market crash? This is the question. This is the question I get asked more than any other question. Everybody wants to know, when are home prices dropping? It's pretty much every day somebody asks me, hey Craig, when are all these people gonna foreclose on their homes so I can buy them, right? Let's be honest, you've had that thought, so have I. Let's just be honest about it. And I always see the memes out there, right? The guy hiding behind the tree. These are millennials waiting for the market to crash so they can buy their first home. That's a real thing. And it makes sense. This market is crazy, it's competitive, it's frustrating, and it's unlike anything we've seen before for a few reasons. Home prices are hitting record highs. There's so much buyer demand that mortgage lenders can barely keep up with the workload. They're all backed up. At the same time, unemployment is historically high, right? And many homeowners are opting into deferment programs or some sort of forbearance program to put off payments. How does this affect the housing market? How do we put this all into perspective? You may have heard about the imbalance between supply and demand to start. This is all too real. We have increased bidding wars. We have offers being made significantly over the asking price. It's moving lightning fast. So will the housing market crash? I have my opinion. It's not very controversial. And the only guarantee is that my opinion is probably not 100% correct. But you know what? Anybody who believes they're 100% correct on this issue, that can predict the future, they're probably not worth listening to anyways right now. I mean, what does Matthew McConaughey say in The Wolf of Wall Street? The first rule of Wall Street is nobody knows if a stock is going up or down or sideways or in circles. There's probably something I'm gonna get wrong here. I'm not an economist, but my opinion is no, there will not be a market crash. I do believe we're due for some sort of a pullback or market correction for sure, not drastic. I think maybe we've just been a little too bullish, but definitely not a market crash. And in this video, I'd like to explain why. Usually when you hear about the possibility of a market crash, you're hearing somebody reference one of maybe 4 variables about the housing market. So in this video, I wanted to deep dive into each of those, right? So these are my 4 biggest variables affecting the housing market from now into maybe the middle of 2021. I'm gonna give you my thoughts on each and then try to sum things up in the end. The first variable is inventory. There aren't enough homes on the market. Compared to this time last year, listings are down 38%. And yet showings, the amount of showings we're doing is still surprisingly strong given, that whole pandemic thing. You might have heard about that. So that's pretty crazy. It's no secret that inventory is low. When demand far outweighs supply, basic economics, the value of the product, it goes up. It's in higher demand. Right now in housing, we have this strong tailwind of millennial first-time home buyers. The average age of the first-time buyer has been going up consistently over the past decade. We have this big buyer pool, this huge buyer pool of capable, qualified, first-time home buyers with good jobs, still have the ability to work from home, still able to pay the bills on time. So support from this demographic will keep the housing market afloat. Might not keep it at the level it is right now, but will certainly keep it from crashing. The second variable is these supposed foreclosure properties. We were talking earlier about inventory and the lack of supply. The way some people are reading the market right now, they're saying, hey, if there's a wave of foreclosures and they all hit the market at once, would that flood the market? Would that tilt the supply-demand seesaw right back in the buyer's direction? And maybe that would be true if it were all going to happen and hit the market all at once, all at the same time. In all likelihood, if we get a bunch of foreclosures, and we don't know that for sure yet, but if we do get foreclosures, they would be trickling back onto the market rather than flooding it. They would be coming on gradually, starting probably in the middle of 2021. So what I'm saying is this is not 2008. This is not the financial crisis. That was caused by loose lending. That was caused by the subprime mortgage defaults. It's different today. It's harder just to get a loan today. So it's a little bit different. And Forbes posted an article the other day. They said 70% of homeowners have 20% equity or more in their homes. We don't know how many of those are actually involved in the deferment programs or anything like that. I don't have those statistics for you. But what I do know is this: the more equity you have in your home, the more that offers a cushion to avoid foreclosure. The third variable is mortgage interest rates. You may have heard about these record low mortgage interest rates, 2s to mid 3s. The lower your interest rate, the more house you can afford. We did a video about it last week. And by all accounts, for the foreseeable future, rates will be staying low, which will help value. See, the federal government is emptying the clip. They're doing everything they can to stimulate the economy. Keeping interest rates low is a strategy. Until the economy shows real solid signs of recovery, I would expect interest rates to stay low. Low rates will continue to drive demand. And that sort of leads us into what I'm calling my fourth variable, and the one that maybe isn't being talked about as much, which is our exposed small businesses. Well, unemployment. Unemployment is really our fourth variable. Unemployment in any size business, big or small, is a huge factor, and there's some signs that point to unemployment actually having a bigger impact on rental markets than on the market for home sales. But still, our small businesses are particularly exposed, right? They have fewer lifelines, fewer options available to them, and every day now you're hearing about another business shutting its doors for good. So what I would say is forget about the possibility of the wave of foreclosures. The wave of business closings is already happening right now, and to me, it's the scarier piece of the puzzle. Depending on the type of business, many small businesses simply aren't fit to survive what we're now looking at as a dark winter. And this is a tough subject. These are providers of jobs. These are employers. This is where many people earn their rent or mortgage payment. And as bad as that is, you look further down, there's this domino effect too. When you think about a business like a restaurant or a gym or a movie theater, so they shut their doors, now they're not making any money, but maybe do they have a landlord or do they have a mortgage payment that they're now not servicing or not able to fulfill? And you start calculating this, and to be quite honest, it makes you a little nervous. If you've been keeping track, this is where all the immediate red flags are in real estate. It's the commercial side. So I know people who own and manage property in retail, hotels, multifamily, of course, with all the rentals that we do. So they can't service operating expenses and debt while they're not making any income, of course. I mean, the eviction moratorium is a whole other thing. So you start looking at this, what does it all mean, right? The truth is, I don't totally know in the end. All I really know is if this affects the banking system, that's what I would call the worst case scenario. But until we have more evidence of that, we still have so many people on pandemic unemployment benefits. We have so much to shake out with people opting into deferment programs and delaying their mortgage payments. We're not even sure if they needed it yet. There's questions around that. We might even have people, I hate to say it, right, but I've heard of it, people not paying the rent when they could be paying the rent, taking advantage of the eviction moratorium. There's so much to shake out here that I can only go on what I see. And what I see is this. I see a hungry, capable buyer pool. I see people ready and willing to offer tens of thousands of dollars over the list price at these open houses. As we go forward into 2021, you're going to hear more about this, the fallout of COVID-19 and its effects on housing. You're going to hear all these statistics about mortgage delinquencies and evictions and failing businesses. And it's going to be on a national level. But here's the thing. Every real estate market is different. We're really made up of a bunch of different mini markets. And we may find out later, we don't know the true impact. We may find that rural areas are more negatively affected economically, or maybe it's urban areas that are more negatively affected. We might find that second home destinations or tourist destinations are more affected economically. We don't yet know the full impact economically. Now remember, I'm saying I don't think there will be a market crash, but I do think we're due for some sort of market correction, some snap back to reality. The fact remains that what's keeping our economy rolling is some cocktail of government stimulus, unemployment benefits, and other incentives like low interest rates, like I mentioned. Honestly, the second interest rates go back up a decent amount, that would start to cool things off. What I'm predicting is this, and this shouldn't be groundbreaking at all. When we have lower coronavirus transmission rates, ideally a vaccine, all this stuff starts bouncing back. When we're able to reopen the economy, we have fewer concerns about ongoing job losses. Now our very uncertain, unclear position we're in now. Maybe that goes away. My thought is we will have some more supply to come in, more homes on the market to come in and balance out this overwhelming demand we see now. Right now, we're in this situation of financial paranoia. We're in this protective mode. And for sellers, why move? That's great, you're getting a high price for your home, but you're still gonna pay that high price for whatever home you're buying and moving to. There's no moving unless there's some sort of major motivational factor. Maybe it's a job change, some outside force like that. Nobody is thrilled at the prospect of letting strangers into their home. There's certainly no older generation selling their home and moving into nursing homes, so we're missing that segment in the market. And rather than selling, people are taking the opportunity to renovate and refinance at these new low rates. When that changes and we get back to normal life, which again, I can't wait for, we reopen the economy, it might take some time, but we'll see more of a balance in supply and demand. That will affect values and bring them down a little bit. Again, not a crash, but enough to make an impact. That's how I see the market. Thanks for watching our video. Again, this is more opinion than fact, but this is what I'm seeing. The world we live in, you only seem to get the two perspectives that are on the extreme sides. It's either values are going up or values are going down. I think the truth is somewhere in the middle. Please send us in your real estate questions and I would love to respond with a video in the future. Have a happy and safe Halloween. Thank you.